What's up? How's everybody doing? Yeah, the Fed came out guns blazing. A lot of people were looking for it today. Yeah, they got a lot of ammo. They got a lot of ammo. You know, stuff that obviously they didn't want to touch. They haven't touched since Buckle. But there's a lot of rigging of this game they can do. You know, that's quite a large bullet they fired today. Rates to zero. That was a lock. It was a matter of how much QE and when. So let's see. All right, we're open here now. We'll give it a look. Let some people stroll in and see how futures play out here early on. You got Powell talking at 6:30. Yeah, I mean, it doesn't make sense. You know, wouldn't make sense for them to wait if they were going to do it. Uh, you know, one talks about, and we had this discussion, how it's not going to stop the virus. It's not going to do anything to stop what's creating all this. But because of this virus, you got a lot of freezing up out there that can be a major, major problem. You're not talking about downside in SPOOs. You know, you're talking about freezing up, locking up of the credit markets that can end up snowballing into something a lot worse. So, that on top of, when this thing down, it'll help that back be, help that be a larger snapback at that. But in the meantime, it got nothing to do with the virus. Obviously, it's no cure for the virus. Yeah, and listen, this is not going to be a lot more coming. There's a lot more coming, especially on the fiscal side. There's a lot more coming, and they need to. There are a lot of headaches. It shows you how vulnerable of an economy we all have, the world in general, that things lock up for a couple of weeks, a month, and you got a bit lock. I mean, think about how many companies out there can't survive without any revenue flow coming in for a couple of weeks. And that's what Mnuchin's working on, and they have no choice. They have no choice. They got to do what they and then they do enough. Hold on a second. They're going to keep coming. All right. Even right. I guess it depends on the close. What are you guys showing S&P futures? Yeah, I mean, all the no, I'm saying down, going down 80, right? It's up to down more than that, but I guess depends on the close. All right. So anyway, we'll see how this translate. Obviously, we want to see some weakness. We rather see some at the open tomorrow. Hang on to some red for us. You had quite the rally into the bell. Quite the squeeze into the bell, and that was all. Now we know what that was all about. That was all based on the Fed coming out and firing that bazooka. Keep me posted if you guys see anything interesting out there. Again, the Fed, you got at 6. You guys hear anything interesting, post it, and I could share. For the most part, we'll talk about sentiment. We'll go over a couple they hit final. Take any questions from you guys. We could talk 50 Cent. 50, he covered some of his position, but he's going to have to, because it expires this week. So he's going to have to make a move. He's going to have to roll. He's going to have to do something. So it'll be interesting. So might get some sort of update on that 50 Cent position at some point. All right, let's get to, before I get to that, just because I got a lot of feedback from some of the people watching on replay. I'm going to talk about what I saw over the weekend as far as, and then we'll go into the details. For those of you who like to look at stuff individually, we'll go over them one by one just so you can see what's there. Basically, what it comes down to, there's almost everything we wanted to see, okay? Even from panic signals, almost everything is there, okay? There's no sense on waiting for that one signal that hasn't got to that point but is close. There's no reason to ignore what's going on until that one indicator finally gets there, is what I'm saying, okay? Enough is there where we want to pay attention, and enough is there in simple English where, from my experience, again, I got deja vu from around those 2018 lows, okay, where at least an intermediate bottom forms, okay? Doesn't mean a whole new bull market, okay? Doesn't mean that the market can't go a bit lower from this point, okay? But usually when those indicators line up, right, the ones we've been waiting on, that's around where a bottom forms. And the reason why is everybody who needed to sell has sold, okay? That's basically what those indicators are telling us, right? There still could be some leftover. There still could be some margin calls here. Still could be some shorting, okay? But all that supply that we were concerned about, okay, not only is it not a problem anymore, there's left of it, okay? So that's what the indicators are showing us off this weekend's update, okay? One I would really like, because followed, one that I would really like to get there that's really close, okay, is a well-known indicator, and I really don't pay too close attention to it unless we are in, major event like we are in today. AAII, okay? Look over, but it's really important in these times. There, we could use a little more capitulation out of the, that can come, it updates, I think, on Thursday. So that's the course of a couple of days this week. All right, but it's close enough. It's really close. All right, and we'll look that over. Another thing, the most now, right? Because it helps with the timing of everything. We want to see the smart money look to take advantage of that sentiment, right? That's what helps us out with the timing of everything. Okay, because like I just mentioned, we could sit at lows and bear sentiment for quite a bit. What we want to see is we want to see the smart money see the same things we're seeing and start to put real money to work, okay? And they do. Sometimes they don't, and they'll hold back, or they'll come in spurts, right, over the course of time when there's something risk, like a credit event, okay? So like if you remember the 2018 lows, the market actually continued lower for a couple days. Might have been that week. It was days in those. So I don't know how many trading days. Before we actually seen things show up in not only the flow, but commercial hedges. Here, oh no, now I'm going too far back. 2000. I was thinking 2008, 2018, the most recent correction we had. So I'll give you an example of what it look like. Yeah, it doesn't have to look exactly like that this go around, but just so you get an idea. Come on. All right. 2018 yen. Here it is. Okay. So again, my best guess, this wash is where everything started to light up. Okay, right around there, give or take. The finally waterfall then capitulated into this low, and that was the end of it. All right, and this looks really interesting because if you look here, this is similar to what we're seeing right now. Wash, there's that snapback, and then if we open up lower tomorrow, and then they come in and buy that, right? So that's what we would want to see to confirm a short-term low, okay? And what was interesting about this setup as well, while we're here, I might as well point it out. The commercial hedgers, go over that, right? That's the Sharpies, as we refer to it, out of the COT data. They didn't show up into this fully, okay? Kind of like we're seeing now, right? They did some buying. Actually, what they did is they took some hedges off, but they didn't get physically net long till this, okay? And if you remember, I remember Carney, you got a kick out of this. This was the little pullback that the riffraff was shorting into, betting that a new low was coming, right? So you had riffraff shorting this, thinking the rally was over. It was just a bear market rally, like some of the others. But this is where the short money showed up. Yeah, so in other words, the commercial hedgers out of the CTFC data that comes out every week. That's who the Sharpies, we refer to as the Sharpies. And we'll look at that indicator, Mike, in a little bit. All right. So I'm just giving an idea of how this transpired, okay? Because it doesn't mean, just because we see some indicators we were waiting on lighter, it doesn't mean that all of a sudden things have to, stop on a dime and turn. Okay, you gotta understand, with a VIX up at where it is now, that's crazy. The likelihood is there's not going to be a smooth ride. You might get long some stuff, run, and it looks like, Armageddon is on the doorstep. All right, but what sentiment is telling us now is there's a higher probability of buyers showing up here, and buy has come down dramatically, okay, on the sell side. And that's important, okay, because in my opinion, and I'm sure you guys will agree, and I think this has been as drastic as this, is because of what transpired up here, right? You had the Fed forcing everybody into risk on assets up here. Even the non-believers who didn't believe in any of this rally had to own, right? Even if they didn't want to, they had to get long. And then all of a sudden you get, and this is a little crazy, but this is kind of what it looks like when everybody's long, there are no buyers left, and you have all that supply, right? Hedge funds, CTAs, everybody has to de-risk. All right, so that's what our sentiment signals are showing us now, is that all that selling, and if you remember, we spoke about this in the last couple of weeks, this was quick. It happened so fast. If you remember, there was 1 week where a lot of this damage happened, right? This happened in all 1 week. There's only so much players can get out of in a week. So now, as time has transpired here, okay, there's a little more time. They had to liquidate, right? And you're going to see what's going to happen now. Even the little that may be left over, okay, any rally, any any bump up or any rollover or fail of a rally, whatever else they need to sell, they're going to sell. Okay? Because if they sold some here, that means they're shitting their pants already, and they're going to try to get out of anything they have left over down here whenever they can. All right? Another thing to keep in mind, okay, because this is the tough part, okay? I'm telling you right now, this is the toughest part of it all. When this thing is ready to finally nail out a bottom, okay, and start some sort of uptrend, there is going to be almost nobody that doesn't believe in the rally, okay? Everyone's going to, you're going to have the whole entire crowd talking about how the Fed, it doesn't work anymore, right? The market caught on to the Fed. The Fed put's gone. The Fed doesn't have, bear market rally. Don't believe the rally. And it gets to you. Trust me, it gets to you because you hear that shit all day long. And with the 50, right? And these rallies not being a smooth ride, right? All the volatility, you can be up and down, 100, 150 S&P points on an intraday basis inside a half hour. I mean, we rallied 150 into the bell from like 3:15 into the bell. So that intraday stuff, when you're in front of the screen, all that movement, it drives you nuts. It gets to you, and you start to lose faith in your signals. Especially if we're seeing flow, you start to lose confidence in it. So that's why ahead of time, okay, you have to be ready for this stuff, all right? Especially like when you see the confirmation that the professional money is starting to see what we see, okay, and they start putting money to work. That's the stuff you need to pay attention to, right? If you're seeing sweeper activity, all right, and I'll give you a good example. Like Friday into the bell, right, at 3:15, you saw that swarm of activity that came in, right? And SPY than anything else. Like you knew it looked different. Like we would see SPY call buying here and there, throughout this whole correction, right? Some spec action that worked on a short-term basis, some that meant nothing, okay? That individual flow, there's no rhyme or reason, okay? When something catches one or two bets sporadically throughout the day, it means nothing. It means nothing, okay? But when you see a wave, right, that band of buying like we talk about come in, and they're hitting up SPY the way they did into the close, okay, that's different. It looks different, okay? And especially if you're trading intraday, if you really want to get in the middle of and stay away from that isolated action that gets ignored. It gets ignored, no matter what the size may be, okay? So going back to the main point, if we do start to see that, especially into weakness, that's where you got to ignore all the negativity, because I'm telling you right now, the news is not getting better. Remember I was telling you guys this a couple of weeks ago? The news is not getting better. Right? The markets don't bottom when the news improves. It's not that easy. In the heart of awful news, that's right. The semis were the worst sector on the face of the earth coming out of that correction in December 2018. Okay, in the heat of trade war news, in the heat of Huawei news, where it looked like these chip names might go out of business, for Christ's sake, that's when these things bottomed and started to see flow, right? Sweeper buying. All right, so that's why, ahead of time I wanted to make it, even myself, it's hard to pay attention to, the signals you have confidence in, because that's where the real buying shows up. It shows up when everybody else is scared shitless and usually on the other side. All right. So on that note, to sum it all up, for some of you that watch this on replay and want to have just basically a quick synopsis to what we're seeing, as far as intermediate sentiment, everything's there. All right, some things can get a little more bearish, right, and that'd be great, but everything is there. Okay, everything is there. The thing now, the only thing to keep an eye on, in my opinion, is the sweeper activity and the commercial hedgers, which don't update till Friday again. All right, and we'll spend some time talking on that. I'll do that now so you guys can see what I'm talking about. All right. And the reason why these commercial hedges are important now, and if you're wondering why we never really spent too much time on them, because they don't get long, too often. Right? They don't get net long without any hedges on too often. They only do it at market bottoms, around market bottoms, major bottoms, and intermediate bottoms. I don't want to say major bottoms. What the hell is a major bottom? All right, and here, okay? So this is basically a quick synopsis of everything, okay? Give or take. So you have short-term sentiment because of that huge rally, not as bullish as we were going into Friday, right? There was a pretty big squeeze, all right? So that's why you don't see this thing lit up green. But this here, for the most part, is all or close enough, okay? And this COT, that's what that measures. See this COT right here? Right? So ideally we want to see them right here, and that's usually where I'm going to have the most confidence anyhow, and probably ends up being the same for you. All right. So let's get right to them. We'll start with them because they came out Friday and I posted it right after the bell. So here's what they look like. All right. And, we were talking about in the past, just to get an idea that they show up in the snap of a finger. Right. They could be net short or hedged out to the max, right, in the futures market. And then just 1 week finger, they get long. And that's usually the riffraff start to really get spooked or get short. All right, so here you go right here. This is what happened this week, okay? So now what we want to do, we want to see them up here, right? That would be ideal because that's where we know that this is basically, we call them Sharpies for a reason, right? This is the smart money in the futures market, right? When they get to this level here, we know we have some support. We know how we have buyers. Okay, part of the reason this market has done what it's done, there's no buying. There's a buyer strike out there. Who the hell wants to buy in the face of this? They're all over the map. All right, so when we get confirmation that these guys are getting involved, they're getting long, right? And they'll continue to add to their long into weakness, and we start to see it react in the flow, which usually happens. That's what it's confirmation of, that there's professional money putting their money behind these things on the long side. All right, so here's some examples of what they did, and remember where they're coming from, okay? And this is why they're called Sharpies, right? They buy lows, right? And what they do is, as a market rallies, they hedge, okay? They until they think it's overdone and the retail crowd is too long. And what they do is they go full, they're hedged. They're not capitalizing upside when they're down here. That's the signal out of here. The market could go parabolic for all they care. They don't care. They're usually early. Sometimes they're early. Sometimes they nail tops. All right. But they don't care on any more upside. And you can see they remain that way. They were down here, okay, all the way up until last week. And then this happened. And my point being that I was getting at is, you see how quick, right? When they decide to, that wasn't a straight line. When they decide to flip the switch and get long, you can see this one not as quick, but you can see how quick it could happen. All right, so this could get there this week, especially if there's significant rally or squeeze out there. We hang around these lows or whatever the case, this has a really good shot of getting there. All right. And look, I'll give you guys an example, okay, of in the past, okay? Here was a rare time that they were buying just little pullbacks. Wasn't a major low, right? And then they, they put some hedges back on. And then if you remember, this was, if I remember correctly, this was Brexit, okay, which caught everybody off guard. All right. But you see what happened? Boom. They bought that. And if you guys remember that Brexit thing, it was so short, right? Lasted a couple days. And then the market snapped back like nothing ever happened. All right. So that's the importance of when these guys get involved. I mean, these guys are the guys who move markets, right? Same thing here. Okay. They get long into these lows, market rallies, right? They put some hedges on, and then you get a pull and they buy that up right quick and pink. All right. So if you're wondering why we're paying attention to this and why it's important, I hope I proved my point there. Oops. All right, so the flip side of that would be specs. Okay, here's the riffraff, right? And if you remember, if you guys have been paying attention, what I tell you is usually the point where the Sharpies are getting long is when the riffraff is taking the other side. All right, and you can see here, riffraffs who were long into the highs as usual, right? Long into the tippy top, story of their lives. They get washed. What are they doing? They're looking to short. Okay. And that's the beauty. See here, like this is the that Carney got a kick out of. Okay. Here they were net long. Okay. All in net long, buying even pullbacks. And then net long, yeah, net long. And you see, same thing, how quick it happens. Emotions. These are all emotions, And this one in particular, they actually weren't too bad, right? Carney and I were laughing because they caught like a low here, but they decided to short into a little bounce. And they got caught. Oh, here, into the highs. Kaput. So anyway, usually when the Sharpies are on one side, these guys are on the complete other side. Okay, so that's where they are. And here's my point. Can, see it down there? Of course. Can we see it down there? Of course. All right. But that's why, and I should have mentioned this earlier, what we want to do now is take an approach where if we see the sweeper activity like we saw Friday, we want to get involved. If we see a name catch a missile out 6 months, you like that name, you want to consider, starting to put pieces on into weakness. Like the whole playbook now has changed to where, if you remember, everything we wanted to be quick on, right? Everything we wanted to be quick. Everything was a day trade would be ideal. Okay. Now that playbook has changed because of this. Now what we want to do, we want to start to look to take advantage of stuff that's been beaten up, take advantage of any further weakness, especially when we see the flow back it up with some time behind it. All right, so an example for anyone who's confused. One of these software names you guys have been eyeing, catches or August sweep, right? And it's impressive action. And you've been eyeing the name and you've been eyeing the name, licking your chops, and you've been waiting for sentiment and all this stuff to line up before you pull the trigger. Now you want to take a serious look at it. All right, that watch list, all right, we've been building watch list, as corny as it may sound. Okay, now that's where you want to start looking at these watch lists, the names on these watch lists. If you haven't, you want to start piecing into them. And again, because the VIX up at 50, you can look to take advantage of weakness. You don't have to chase green. You don't have to chase rallies. There'll be fades out to wazoo because the news is so negative besides. All right, so that's the big difference from this week as opposed to all the other weeks. What else did I put out here from Oh, this is another one, okay? This would be ideal, okay? This, to me, this would be the coast is clear. Honestly, this would be the coast is clear, okay? This Sharpies in VIX futures, okay? Sharpie money we're looking at in ES, NQ, and the index futures, how they're positioning in VIX, okay? And the same logic, right? Here, when VIX is dead and nobody wants it, right? So they're net long. And what they do, bink, pop, and now you're going to see them start to slap on hedges. And what we're looking for is for them to get net short. All right, so in simple English, they would be net short VIX futures, okay? Betting on downside in volatility, right? And you could see this. I wish I blew it up even more, but you wouldn't be able to make it out as clearly, go back further. But every time you get a VIX move, that's what they do, okay? That's what they do. Not as soon as it moves, but usually near the highs is when they take a short position in VIX, all right, betting on downside. And to me, that would be the coast is, oh shit, I almost knocked over a coffee, my bad. That wouldn't be anything new, so don't worry about it. I've spilled many of coffees in my day. But, this is, like, in other words, I'd feel a lot better building positions in names if we see this, right? There's no better way to put it. The coast is clear indicator is how I would label it. Yeah, all the Sharpie stuff comes out Friday right before the bell. I update it literally right at the close, like I did this week. Oh, I wish daily, I wish. But the data doesn't report daily, it reports weekly. You know what the problem is? If we ever get like a market shutdown or anything related to some market shutting down, this is going to get screwed up, the reporting. I don't know if you guys remember. You remember what happened? Anybody remember what happened the December 2000? Anybody remember what our conundrum was? What got in the way? It was the freaking Christmas holiday. And in other words, we didn't get a report that week because they don't report during the Christmas holiday. So we had to wait an extra week to realize that all in long. So that's the problem sometimes with these indicators. All right, but this is, yeah, Powell's on now. Powell's on now. All right, so anybody have any questions on this stuff here? Because it's important, this stuff. I might as well ask now. Anybody have any questions on the Sharpie crowd? All right, so you look for a Friday. I literally post it right at the bell as soon as I get it, because I know a lot of you are waiting for it. And I'll mention it over and over again, so you don't have to worry about it. Yeah, they usually line up, Kev. They usually line up. Like, from my experience, again, I could just tell you based off my experience. And the short money is getting long in the indices, right? We see a better looking flow, uptick in buying in the flow, okay? Usually when these guys are getting short VIX futures, that's where we start to see VXX put sweepers and that sort of thing. FYI, the next holiday, thank you, John. So hopefully we get it before that. Otherwise, it only costs us a week. But, sometimes the week could be, near bottoms, right? So that's what gets annoying. Yeah, you're going to see, exactly, Kevin. You see quality. I should have mentioned that. You start to see quality out of the flow. And it's noticeable, what we're seeing right now. You know what I mean? Compared to what we're seeing now, the flow's been awful. We'll talk about that, but the flow's been awful. Friday was finally, we start to see a little bit of buying, but it wasn't anything impressive. Compared to what we were seeing, it was a noticeable difference. All right, there were some names taken out of the flow Friday. All right, so this is what it looks like for those of you who were asking earlier. See all this data? Okay, this is on private Twitter. I think I posted it in market updates as well. It's an indicator form. Okay, so you don't have to look at this unless you're interested. All right, but that's what those indicators do. They put all this data for us in indicator form. So you see commercial hedgers, that's who we're looking for, right? And then you got large speculators and then the riffraff. All right, but if you guys are interested in it, you can take a peek at this. See, Friday afternoon, updated weekly, tells you a little bit about it if you're interested. All right, so let's get to some of the other indicators out there. I posted everything I saw this weekend, just so you can see that a lot are lining up. A lot are lining up, all right? This is out of Morgan Stanley, okay, showing you, prior to other pullbacks and corrections, according to what they look at, a lot of panic out there. This is equity risk premium from Morgan Stanley research. All right, and you can see the large spike there. Let's see. We'll talk about the Fed balance sheet in a little bit. Insiders, we've been talking about that as well. They're doing some buying. That's not a bad thing. A lot of it's in energy. That's a bad thing because we're not really interested. But we want, when you have this, when you're looking for a bottom to form, you want buyers to show up any way they possibly can. All right, and if insiders are putting some money to work, that's a good sign, right? As opposed to like Royal Caribbean, RCL, where the CEO's dumping stock after the stock just got cut in half, and now, it's telling. This is another thing out of the COT data a couple of people follow. This is positioning in the Fed fund futures. A lot of people who follow it look at it as a leading indicator. All right, so it's not real time, kind of like what we look at. It's more of a leading indicator. All right, and you can see this has been heading south for a bit and finally turning. All right, and people look at this for more of major bottoms, like where lows should hold up for good. All right, and you talk about the end of June is where this turns. I haven't followed it that closely, so as far as credibility, I can't really vouch for it. But I know quite a few people who follow it. McClellan, he's somebody who follows it religiously. So there's quite a bit. Here are the hedge funnies. Our boys. The boys. And I mean, that's pretty telling in itself, right? Okay. They were in. We were always nervous about them being in. Again, not because the market's going to stop and collapse because they're long. They're not that bad. But the problem is, if something shows up, right, a trigger that creates some liquidation, they have a sell when they're all in long. That's the problem. All right. And we were talking about this the last couple of weeks, right? I have through any correction, let alone a major one like we have right here. Okay. I haven't been through any correction the 20 plus years I've been doing this. It has bottomed while these guys were at a net long extreme position. Okay. So in other words, in simple English, markets don't bottom until these guys puke their longs up. All right. And get net short like they did here. Okay, even little corrections you could see, they wait for them to puke up. Okay, so they actually did a little buying into this pullback, right? Which was another cautious signal, and now they've had enough. Okay, so the likelihood is the next update we're going to get, they're probably going to be at a net short position because this is a little delayed. That's the problem with this indicator. This is a little delayed, John. There's no rhyme or reason behind it, unfortunately. Sometimes it updates every couple of days. Sometimes it could go a week without updating. I don't know what the structure is as far as when they have to report, but this thing is really quirky with its updates. All right, so that's the problem with it. You know, that's why you don't want to use it as a sole timing indicator, delay. But once we see these guys down here, just one more thing to feel good about. I already feel good about them being neutral. You know, I already feel good about it. All right, because like I said, they, as bad as they've been, they manage a lot of loot, right? And the margin calls and all that stuff, when they're over their heads long, and you got something like this virus show up, and they have to, you know, just get out of shit because of margin calls and stuff, it can weigh on markets. And not only that, the smart buying doesn't come in until they know that selling and that supply is gone. Why would they step in knowing that there's more supply to come? You know? So that's the most important part about it. All right, so we'll see where this thing ends up next update, but quite the improvement. This is another beauty. This is retail put to call premium. Okay, you can see it explode there. That means they're robbing the riffraff on puts. You know, the riffraff's getting sloppy buying puts. They're robbing them. The riffraff don't care. That's how they roll. All right. Even better, this is a weekly. Wait, oh no, this is the one I was talking about. So this is weekly retail only put to call. Okay. Again, another thing we were worried about, right, as the market was rallying, kind of, you know, you don't want to get over your head long knowing that the riffraff is loading up on the call side. Okay. Market continued to go higher, but they always get caught. All right. And look at this explosion. You love to see this. You love to see that. That's a great, and that happened quick. Look, I felt like it was never going to get there. Here's some, those of you who were around the last correction probably remember. If you weren't a member, you probably never saw this before ever. Okay. This is a Fidelity Funds indicator. And when this thing flashes 0, okay, when it gets to 0, that's basically capitulation on some of the professional money front. All right. And again, a lot of intermediate lows. It's got a pretty good track record, usually form when this thing is flashing 0. And it finally got there on Friday. This updates every day, I think. This updates every day. All right. The problem with this indicator and why you haven't seen it for over a year, all this means nothing, right? There's no signal there. Okay, the only signal is capitulation, and that's usually, so here's an example right here, down here when it was down there, and you see how you had an intermediate low for a couple months? It doesn't look like much because there was another waterfall after that. But you know, the market basically bottomed for a couple months. There was actually some decent winners in that mix, and names too. Oops. All right, so that's bullish. We'll talk about gamma at the end of this. I don't want to confuse it. Oh, here's Goldman. This is the positioning indicator. Okay, this is improved too. This wasn't there this last week. Showed light positioning, but now looking a little bit better. All right, if you're wondering why these different firms, different banks have different sentiment indicators, they're, you know, different clients at different banks. All right, so Goldman clients are positioning different than Bova or Citi. You know, that's why they're different. All right, so this is better. Obviously, you would like to see it in this neck of the woods. Maybe it gets there. Maybe it gets there this week. This finally came down. I don't know what the hell was going on with this thing. If you remember, this was stuck up at Euphoria. even as the market was falling off a cliff. But now you got neutral. All right, and once you get to here, this could happen quick too. This could, you know what it is, Tree? You would like to see panic here. This is Tobias Lefkowitz. You probably heard of him. He's pretty popular at a city. Okay. You would like to see this get there. It usually gets there in a market like this. Okay. But I remember like there, I don't know what correction it was. It wasn't the 2018 correction. Sometimes it doesn't get there and markets bottom. It's not there at every bottom. You know, it's not there at every bottom. All right, this is a really longer term, slower indicator, but obviously would be a good sign. It's got a great track record when this thing gets there. All right, but what I'm saying is if you have other signals there, you don't want to be waiting around for just this one, you know? So here's the point I'm trying to get, Trey. We may have an intermediate term bottom, let's say this week, right? And the markets bounce around, trend higher, we rally a little bit over the course into the summer. And then June, the markets roll over and make new lows. Okay? And then it gets there. But for us, you want to be a part of an intermediate term bottom, obviously, right, Trey? We want to be involved. If this market's going to bottom here, and we want, there's going to be some nice flow and some nice names that have been decimated, you get some huge rallies off these bear market rallies. People don't realize that. Some of these bear market rallies over an intermediate term basis are better than rallies in bull markets, without a doubt. Not sometimes, all the time, because things have been beaten up so much. So it happens quick, right? So you see sweeper activity come into, a software name that's gotten battered, and the stock, you're out of in 2 days, that usually in a bull market would take 2 months. Right? So those intermediate term bottoms are important. That's why it's worth looking at this stuff, even if it's not signaling a major bottom. All right, so that's what I mean. You may see this thing lay around here, we bottom for a couple months, and then the market goes to new lows, right? Because the virus is worse, or economically something happens, and this thing ends up in panic. That could very easily happen. All right, that's why I stress all the stuff we're looking at doesn't mean bottom. That's it. We'll never see those lows again. They're intermediate term signals. This is another good sign, right? When people are just taking their money, putting it in money markets, and physically losing money with rates where they're at. This is what it looks like. Okay, let's see. Do we have, here's 08. You can make it out a little bit. Oh, this one goes back. Here you go. Oh, this is just 2-week percentage change. So here's 08, Armageddon. And this is how much money is going into money markets now. Let's see. Sentiment Trader put out some good stuff over the weekend. That's why I posted a couple of them. Oh, here's 8 straight days with these gaps. Look at this. Crazy. That came similar to 08 near the lows. Look at this, 87. Otherwise, there's really nothing else that compares. These gaps are nuts. No? These gaps are insane. You got basically limits, right? Somebody said we're limit down. Are we limit down right now? These things, limit is becoming an everyday thing. Futures down 1,040. Is that limit? Oh, we stopped 15 minutes. Here, stocks are undervalued considering earnings volatility. All right, so everybody who was worrying about being overvalued, blah, 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 completely washed out. Completely washed out. This is, who's this from? Deutsche Bank. Consolidated equity positioning at Deutsche Bank. Kaput. net short. Risk parity, south. Look at this, all in long, and then some. You know, you want to know what the market looks like this without a buyer to be found. The Fed forced them in. That's why everybody hates the Fed. Classic sign of panic in corporate bonds. This is why the Fed has to do what they do. It's got nothing to do with anything else. It's got nothing to do with what they think the economy is going to do second half. It's got nothing to do with stock. This is just when you get a freeze up, and that's what we're getting, right? Economic freeze up. You got a debacle on your hands in the paper markets, and you know, look at this, all out panic. Look at this. Smart money indicator. This has been bullish. All right, and usually could be, well, the green line, a lot of people that I know don't even use this green line. They use it up here, this line, I don't know if you can make that out, but that's there. Okay, they buy dips, they sell highs, that's what they do. December, to use a comparison, December 2018, this thing flashed a couple of bullish signals, and markets found a little stability, came out, stability, then you had this wash. This was a bit early, but lows. Here's another indicator, liquidity premium. This is basically when everybody has no interest in owning individual names because it's too risky. So there's money, funds out there that need to be long, need to park their money in something. Okay, and when they don't want to take any risk, they want to fund the most liquid assets, and they have to park there. That's when you see a major spike in this thing. And this spike here is major. Like even 2008, you didn't have spikes like this. This was the bottom 2008 here. Bull bear indicator. Okay, so this is an interesting look here. Okay, and the reason why he did it this way. Oh, is this? Yeah. So he was putting in another measure. So basically, this is how he's framing it, right? You already have a signal to buy, even though it's not technically in that bullish territory, right? Because it's at 2 something. You have a signal to buy unless there's a credit event, right? Unless something blows a credit event and there may be a need for more selling, right? So that's why he's got it here for a different look, because outside of a credit event, usually this thing nails bottoms right where it is right now. All right, with credit events, you know, that's where you probably want to wait till it gets into the green. Oh, wait. 2011, we don't even talk about that. That was a quick one like now. That was crazy, that one. Yeah, there were some quick ones. Oops. What else I got here? These are some more longer term ones. This is NAAIM. It stands for advisors. This is professional money exposure index. So this is, again, not a survey, no options. This is actual positioning. And, you know, it doesn't always get down to 0. But when it does, that means even the pros have nothing, no exposure. All right, you can see 2018, it didn't even get there. You know, so it all depends. But this is all positioning here on the professional side. AIM, I know a few of you like this from prior pullbacks. You don't get too many signals out of this, only legit correct. All right, and this could be early. All right, but that's fine because when it's down here, that's when you want to start now taking a serious approach on exposure, especially when you see flow. Especially when you see flow. You know, so a lot of these things that we wanted or would prefer seeing are there for the most part, you know. Here's Nomura. So this is basically McElliott. So McElliott is saying that everything he was talking about on the other side, right? That if there was a trigger, you would get a debacle. Here's the debacle. Now he's saying complete opposite, just like that. Where is, oh, here's 08. 08 down here. All right, so that's completely washed out. Here's his CTA exposure. And I think this is more of time than anything else. I don't think they've had enough time to get down here. You know, they didn't have enough time positioning and get net short all in. So you might see this even if the market just hangs around, this continue to come in. See, are barely able to keep up with the pace. That's the point I'm trying to make. You know, and this takes everything, by the way, not just the S&P 500, everything. It's got to be quick. I mean, can you imagine like managing money? Like we talk about like us, right? We don't have to do shit. We can sit around. We can wait. Like, can you imagine like you managing client and fund money in this shit? And you got to flip and you got to go net long, net short. Oh my God. Holy, I can't even, Sean, I can't even think about it, you know? Oh, I always, bro, I'm telling you from my experience, when when you're managing just individual money, your money, and you don't even realize the advantage you have over managing client money. The stress, the emotion, oh my Lord, because you don't have to do anything. You know what I mean? Your signals aren't there. You know, you can F around, you can have fun, you can enjoy the sell-off. You don't have to worry about clients calling. You know, that's what I mean. Like, that's one thing we should never complain about forced trades. You know, you got to get rid of that degenerate feeling. You know, you don't know what a real forced trade is until you manage money, right? Remember, like the highs we were talking about, how, you know, it wasn't even a decision, these professional money managers, to get long. They had to get long. With the Fed doing what they were doing, they had to. If they didn't get long, they would lose clients anyway. You know, they would lose clients anyway. That's a lot of stress involved. So we have a lot, you're 100% right on it. We have a ton of advantages just managing and worrying about our own accounts. But I think I pretty much touched on every indicator we care about. So this is this. You're going to see even higher than this. All right. And listen, and this is another thing that goes back to the noise, okay? Because like I probably will sense it already with the futures limit down and the Fed firing the bazooka, and the Fed doesn't matter anymore. I'm telling you, I've been telling you, can hear all of that, okay? Because when it bottoms and rallies, they're not going to let anyone believe in it. They're not going to let a soul believe in it, all right? But I can tell you from my experience in 08, all right, it wasn't the first Fed move where the market just stopped going down and rallied, and a siren went off so every riffraff and their uncle could flip long. Doesn't work like that. You know, the Fed came in, did their thing, the market popped, they sold into that. Right? They voted on a TARP bill, they didn't get enough votes, they were rallying up into it, they crashed the market off that. You know, it was a multitude of things, but the most important thing was they kept firing, you know, until the market said, okay, they've done enough. Yeah, and you know, it's not just boom, they come in and they fix everything. You know, they're focusing on another issue here. They're not focusing. The reason why they're taking measures of like this is not because of the market correction. You know what I mean? It's because of what the market correction has created elsewhere. You know, more of what the economy has created elsewhere. You know, because if you look back, I mean, look, okay, big picture wise, the speed of it though, the speed of it is what creates problems, and the potential of a global economy locking up for as long as it may have to is creating problems elsewhere in the credit markets, more importantly. You know, but it's not like, you know, 08 where we gave back every looking gain. You know, this is what 08 looked like at the time. Is this 08? Yeah. You know, so keep rally over those years, everything to new lows. You know, that's what it looked like. Look at this. You know, the speed of this is what has them nervous, and they're seeing the headaches already. Look, so that would be like 08 would be equivalent to us being here, even lower. That's nuts. That's nuts. All right, and what I mean by intermediate term bottom two, guys, is what I mean for some of you who may be confused on that, right? So you get something like this. Let's say market goes, oh no, they broke the lows, we're going lower, the Fed sucks, the Fed's useless. Then they squeeze them. Then they go, just a dead cat bounce, short of a, and then they squeeze them. And then you get this little like, and down, then pop, then down, then pop. And all of a sudden, you know what I mean? These things hang in there. And if the market wants to go lower, you know, you get a ultimately, usually it's a couple months, you know, usually you get an intermediate top that's lower than this one. And then the market goes through. Okay. But you want to know the difference? You see here, all the intermediate term sentiment signals are lighting up green. Usually when this thing is ready, what do you think happens to all that extreme bearish sentiment? All those shorts, all those put buyers. They're not in here. You think they survive this? You know what I mean? So all those bears, all that bearishness, all that panic, you like my, I made a mess out of it, but you get the idea, right? So around here, lows hold up at some point in time, and when the market rallies at that point, you're going to see sentiment not only flip to neutral, believe it or not, you're probably going to see some bullish, extreme bullish signals on some of those things. And then the market's got the green light to roll over. You know, but when you start seeing these intermediate term sentiment signals lining up bullish, okay, that's where buyers seem to show up. Yeah, that's where buyers seem to show up. And it doesn't feel like it, because like right now you get limit down, right, in the futures, and it looks like, holy shit, none of this matters. None of this matters. Everyone's just selling. It's a debacle, you know? But that's where buyers show up and you see some stability. You start to see some constructive price action. You start to see some constructive flow little by little. You know, you start to see individual names start to outperform, right? So maybe the markets are down, but oh, look at this shit. What's his name? What's his name? Caught flow. That thing's green today. You start to see those things. Yeah, that's Gordon. That's the speed of it. That's what it is. Everything's so much faster. Everything's so much faster. Everything's so much faster. It's ridiculous. The speed out there is insane. But you're 100% right. Everything that used to happen, it feels like, over the course of a week, happens in an hour now, Gordon. It's out of control. It's out of control. Yeah, the system's grown. You got machines, right, all over the place. It's not even humans moving these things anymore. So I guess it's expected, but no one complains when the market's moving up because of it. But when the market goes down, you start hearing about it all. Right? It's true. It's true. All right, but so the name of the game here, again, we don't want to go in tomorrow and just buy up every living thing. Okay, not yet anyway. But tomorrow we get limit down. Okay. Again, last week, the week before, you heard out of my mouth, listen, even if you see some flow, if you can day trade, that's the ideal. You want to be quick, you want to be tactical. Okay. Now you want to start looking at the next stage. You want to start looking at that in between trade, okay, and take advantage of weakness. But you want to take a nice methodical approach and let the flow be our guide. You know what I mean? If we see they're buying shit, right? And that's what's going to be the difference. You're going to see them buying stuff no matter what the market's doing, right? You're going to see that type of action we saw at 315. You're going to see that type of action come in while the market's down, sideways, crooked. It's irrelevant. All right. That's going to be the sign that allows us to get a little more aggressive little by little. All right. So you let your guide as to, how you want to change a little bit as far as style. All right. Because you're going to see, like, little by little, they're going to hit names and they're going to continue to come back. They haven't come back for any names. It's been ridiculous. Right? If we're going to talk about flow now, it's been ridiculous. They haven't showed up in any names. You see one isolated bull bet and you never see anything else. Right? All the clusters, we talk about those bands of sweepers, they've been all in spot. A lot of them in same day expiration stuff. They don't even want to go out the couple of days and go in weeklies. They're buying Wednesday expiration. And you can't blame them, right? Because look, think about where we were a couple of weeks ago, okay? They knew that we were going to end up being like Italy, China, and everything else. They knew it. You're going to buy ahead of that when the market needs to price that in? I remember, like Dan Niles, what he said, I'm not buying Disney now. I don't care where it's trading. I'm going to buy Disney when they shut down all the parks. All right? And then that's over with. And what's the retail guy out there is the complete opposite. He looks at the negative news because now, and he gets more nervous. But when you and I are nervous and looking at shit, when we're paying attention to it, the market priced it in a month ago. So the news is going to get worse, not better. We got to be careful of rallies on good news in this type of market. It's rallies on negative news that we want to pay attention to, if that makes any sense. I know it probably sounds foreign to a lot of you guys, but trust me. When you start to see, again, pick any name you like. What's a name that, Amazon or Google. When you see Amazon warn, okay, or Amazon talk about how this virus has affected, and then that stock gets hit off the algos, and then they buy it up and turns green, that's a constructive sign. You know, it's not going to be good news. Like the economic news on the economy hasn't even got bad yet. You guys realize that, right? We had job numbers come out. They were solid as a rock. Wait, we haven't got started there yet. But once the Fed does what they need to do, and once Mnuchin does what he needs to do, the market's just not going to give a shit about that. So we're going to see the job numbers look horrendous, and everyone's going to be like, oh my God, look at these job numbers, earnings, blah, blah, blah. Mnuchin's the only guy at Tree that's holding that in regards to the economy. He's the only one. You know what I mean? Everybody else is scratching their head wondering what the hell's going on. It's all about Mnuchin. As long as you see Mnuchin involved, you can feel okay. If he's not there, I'll tell you one thing. A lot of people said, if Mnuchin ever, it would be the apocalypse. Yeah, he's a weird guy. You know, it's funny because I saw an interview with Trump, and he was talking about that. When he was looking for the job, you know, to hire for the Treasury Secretary, they said, listen, you got to go and beg this guy Mnuchin to take the job. And Trump was like, I met this guy. You know, he's a weird guy. Trump said this. Sociable, you know, I was thinking maybe we have somebody who's more sociable involved and all that. And everybody around him, you know, Gary Cohn, all those guys, they said, listen, you beg this guy to take the job. Beg him. And, you know, now he knows. He gets on the phone, calls all the banks, Christmas, December 2018, and basically nailed the lows. And he's going to do it again. He's going to do it again. You know, he's going to do it again. You know, Goldman runs the whole world. You know that. I don't want to get conspiracy theorists on you, but you know that already. But yeah, he's the man. He's weird, but you know, when it comes to markets, he knows his shit. Forget about like Kudlow and all these guys. You know what I mean? Those guys, characters. They were all characters. Mnuchin's legit. Anybody have Mnuchin? Oh, Tim, don't even do that. Mnuchin test positive for corona. Oh God, Tim, you're evil. You're evil. All right. Anybody have questions on anything else? You know, as far as flow is concerned, I'm sure you guys have names you're looking at already. I posted the top bet list. I had it pinned, but then I moved it for where's favorites on this thingamajigga? Hold on a second. Hard on it. Now, how do I find? Where the hell's favorites? Oh, likes. Here. DSI, we were at 4 on Thursday. Friday, we rallied, so we're probably higher, Tim. I get that later tonight. We're at 4 going into Friday. So we're probably, I would say maybe 10, 9, 10. You know, here was some of the action that we saw on Friday. Trip, listen, this is probably one of the most dangerous stocks out there. All right, so if you're with kid gloves out there, you know, being careful about it. I don't blame you. Take your time. You got time, you know, little bits and pieces. Ironically, so far, this has been catching the best action of them all. All right. Even if you don't like Trip, this is the blueprint of the type of action you want to see. Okay. This is the blueprint. I keep going back to December 2018 with SE and all those new names. They were catching bull combos, risk reversals like this multiple times. Okay, not just one, multiple bull combos in a name like SE back there. All right, but this is your run-of-the-mill option player is not playing these type of things. You know, these are Sharpie bets. And you want to see time. You don't want to see short dated stuff. You want to see time. Because you know what it says? They're making a bet on the name. You understand? So, and a lot of times it's an Ackman type guy. It's one of those type guys. They're making a bet on the actual name and size. All right, as opposed to, even this, okay, where they may see value and it's just a trade. All right, this is not about a trade. They're making a bet on a name where they think the selling has been overdone. CRM caught some decent June action with time. You guys want to keep an eye on that name. I know a lot of you guys like that name. All right, AAL, I put this on here because a lot of you were asking me about it. AAL, I've seen multi-million-dollar sweeps, so this is not anything significant. It's a decent bet. They're probably, playing bailout news or something. All right, and Apple, same thing, really nice size sweep, short. All right, so it's not necessarily a bet on Apple. Longer term, it's just they're betting on a rally. All right, but as far as longer term bets, I can't stress it enough. You want to see this stuff, and you want to see more than one. More than one if you're going to take a serious position. If you're not and you're just going to play it, then it's a different story. But if you're going to take a serious position, because a lot of us like to build a little size up in a mess like this with time. You want to see more than one because one can mean anything, guys, in this shit. There's so much out there going on right now. One order can mean anything. Whether they're sweeps or combos, you want to see more than one. Again, like the SPY action, it's an ETF, and we've been seeing it all in SPY and nothing else. But that's the type of action you want to see to have confidence and take, a legitimate position. Where they come in one after the other after the other. And at least, you get momentum too. Even if you're trading it short term, it helps on the momentum side too. Yeah, and we are seeing put sellers. We're starting to see some put sellers. That's also a really good sign. They're willing to buy the stock any further weakness. Okay, may not tell us much about the upside. That's why we want to see call sweeper activity around it. But put sellers, they're telling you, okay, there's a lot of damage. I'm going to sell puts. If I get put to stock, I'm okay with it. That's what they do. All right, but this was the chart. This is where they hit up SPY, and this span right here. One after the other, all basically the same line, couple of different lines, but where they hit it hard, and you get juice off that. So short term, longer term, you always want to see multiple. The more the orders, the better in this climate. We're in bull markets. We play anything. All right. Did I miss anybody? Trip? Are they buying the calls and selling the puts? Yeah, they're buying the calls and selling the puts. Bull risk reversal. And you can see why they're doing it too. Look, they're taking in 4 and change, and they're taking all that money and putting it into calls. But they're also selling puts near the money, right? But they're getting some decent wood. So like the problem with put sellers, you don't know the upside. That's what, if you just get put selling, a lot of times there'll be some stability there, but you don't know the upside. It's tough to get a gauge on. But when they take those proceeds and they flip it into, they're looking for the double whammy, Yeah, exactly. It takes a pair of key hoons. Now that's why it's not your run-of-the-mill trader out there. Did I miss anybody else's question? I gotta expand this list because sometimes we talk here and I miss people's questions here. Did I miss anybody? Anybody have anything important they want to ask? At market bottoms, do you look like sweepers in the big names? Ani, put it this way. If I want to see momentum now, okay, just let me say it. Because, like, for example, if they're going to hit SE and they're going to continue to buy it, that's all fine and dandy, but that's not really going to have an impact on the indices. All right. So if I'm just looking to build a position in SE, then that's the type of action I'm looking at. If I want to make, if I'm going to place a bet where I want the market to move sooner than later, I don't want to be underwater. I don't want to add into weakness. I want to see data names. I want to see the names that make a difference. Apple, those type of names. The under the hood type names, if they're hitting just those are good to, like, that methodical approach I mentioned earlier. You want to build a position into, right? You get a little more weakness, especially if they hit it again, you add, and you're not worried about nailing the bottom today. You're looking to take advantage of weakness. The SPY calls, I think, were a play on the Fed. Okay, the problem with the SPY calls, because they were short dated, they weren't long-term calls. The problem was this. The market ripped. Look at the rip. Okay, so SPY, they were hitting it right around 257-ish. And then, you're going to rally to 271, 272. That's a 14-point rip. So we'll see, even in open interest, we'll see how much they held on to. But, if action like this, okay, if you get a move like we got into the bell, you got to take some of that move. You want to let some ride, that's fine. If you're playing March calls and you get a 14 handle rip right after you buy it, yeah, you got to be smart about it. Don't get me wrong, you could hold some, but they're short, they're trade, it's a trade. Yeah, right, Joey. That's what I'm saying. If they go, you buy something and in 15 minutes they double or go 3 times on you in this market. Come on. You want to take some of that off the table. Because the only time you wouldn't take it off the table is if they're July calls. All right. And you're looking for more than that. Okay. But you're okay with giving up profits because you're looking to add to it. Right. You got time. They're July. You're not worried about it. But if you're playing, weeklies, or this case it's this week, you get a move like that inside 15 minutes. What do you want? 10 times? If you do, that's okay. But just understand you're taking more risk, obviously, with a VIX over 50. Stuff for, again, this all goes back to, we talk about all the time. If you're in for a trade, when they give you the money, take it in this type of market, right? You're in for a trade, you get a nice rip, you get paid, take it. Okay? That's the trade. For stuff further out, you want to make sure you have enough time. You're not worried about nailing the bottom. You're not worried about giving back profits if you're up on it. And you're looking to piece into weakness. But the most important thing is you have time. You're not doing it in March calls. You're not doing it in March calls. I like the more time, the better, Nick, for me. But like what I would suggest, I guess it depends on the flow for swings. But what I like to do in this type of market, because of how much things have gotten beat up, I like to go as far out, if they go, like, for example, if they go out August, September, October, like, that's something I'm more inclined to build a position in. you know, monthly or inside a month, I'm going to trade. A lot of times I'm just looking to day trade those personally. But I'm saying you swing them, you get them, you get a nice rip. You want to take that off the table. Because here's the thing, that can all change. But right now, with the amount of volatility we have, you got to understand that even if you catch a rip, the likelihood is there's going to be swings inside that rip that you're going to get thrown all over the place. You know what I mean? So you may have nice profits and they can evaporate. And then you could have nice profits again, all literally inside a day. That's the problem with a VIX where it is right now. Yeah, exactly. And that's what I'm saying. If if we do form a bottom here over the short term, right? We see improvement in the flow. You see the VIX start to come in. We see the Sharpie starting to get net short VIX futures. You know what I mean? That's a little different story if things settle down. But right now, you could be on top of the world in a short-term swing, and you catch a headline, and you're going to get eaten up. You're going to get eaten up. It's tough. It's a tough market for that in-between trade right now. It's a tough market. So personally, I either want to be really quick or have enough time to survive the volatility. Okay, that's a different tune for me now. Okay, because I didn't even want to do that second thing I just said, have enough time. I wasn't looking to buy anything with time because I was worried about more downside. Now I'm not as concerned about being early. All right, that's the difference. I may be early, there may be more downside, but I know that I'm closer to that intermediate term bottom and a nice rally than I was a couple weeks ago. That's the difference. That longer term trade was out of my picture. I wasn't even thinking about it. I wasn't really thinking about it at all. So now I'm going to start to pay attention to it. Now I'm going to start to take it serious. So again, tomorrow we're limit down, we open up, and somebody comes in and fires a missile. Here's an example: ATVI, right? Somebody fires a missile there into some weakness. Goes out to August, July, September, whatever it may be. I'm interested. Prior, I wasn't interested. It's on my watch list. You know what I mean? They go on my watch list. So now I'm ready to start to put some money to work longer term. All right. And then that intermediate Dow tree, I'm interested in that 5-6 month trade and on. Okay. Remember, Tree, we were talking about just tactical, stay tactical, everything, stay tactical. Remember, it was almost getting annoying how much we were talking about that. Like that was the only thing we were focused on. Right, exactly. Right. So now the playbook's a little different where you still want to stay tactical on trades, but if you were interested in taking advantage of some of these names that got hit with some flow a little longer term, now is a good time to start to look at that stuff. Oh yeah, Gordon, me too, man. Me too. Staying tactical, you know what I mean? Throughout this mess. Again, you're gonna lose, you're gonna have losses. That doesn't change, but it keeps you alive, Gordon, right? It keeps you alive and involved. So now, once things improve here, again, it's the winner is who's around with some chips to fire when the dust settles. All right, and it's hard to put it into words. Listen, I can tell all you guys, okay, if you're paying attention and you don't let your bias and the noise get to you, okay, the signs will be obvious when we start to see improvement. I can promise you. Okay, I can promise you. You're going to see it in the price action. You're going to see it in the flow. You're going to see it all over the place. But the noise and your bias could make you blind to all of that if you allow it to. But if you're paying attention, you're going to see all that stuff start to become constructive. I can promise you. You're going to see names catch sweeper activity that you don't play, and you're going to see things start to work. You're going to see some bets start, some short-term trades start to work, regardless of how negative the noise is or how scary the market looks or up or down. You're going to start to see some of that better looking sweeper activity work, and little by little, it pushes you in to get involved. But you have to be paying attention. And you're probably saying, well, what? How can you not pay attention? I told you, I've been, since I'm even in the steam room, I've been a part of. There've been people out there who they're just so negative, right? Off all the news that they're looking at and reading, right? So like the virus is going to turn us all into zombies. The economy is going to be on lockdown. This is a debacle. The Fed doesn't work. You put that all in your head and you can't even see the positive signals out there, or you may be in a short. You don't want to believe the positive signals out there. The players who are successful shorting, even in this market, are the people who could get out of the way when they see SPY get attacked by sweepers like that. You know what I'm saying? Like they're going to sell this close into Trump. I know it. They're going to sell this close like you've never seen before. And then you see action like that come in at 315. Some people, they're protecting shorts. That's not, you know what I mean? And we'll hold on to that short. The people who have success shorting and playing both sides are able to get out of the way of that, or even flip long, which I could never do, psychologically. But those are the people who have success playing both ways. Google caught a bet too, right, Ani? Google caught a bet. Sean's talking about Wynn. Wynn closing its proprietary. Oh, Wynn's closing its properties for 14 days starting Tuesday. Yeah, Sean, little by little, everything, brother, locked down. They're locking down everything. Do you see Italy, Sean? Have you seen Italy? You see what's going on there? Oh my God. How though? How'd Italy? Anybody have any explanation why Italy? Italy became such a mess as opposed to any other European. No, seriously, Nick? Is that what it is? Or you're kidding? Wow. Nick's saying they had a lot of Wuhan workers in there. I know the older population is why the higher death level. Yeah. Jesus. I can't believe how bad it is there. The numbers are crazy. Yeah, the hospitals got overwhelmed. That's what they're worried about here too, Tim, right? Like that's the big fear. That's the big fear. Oh, they couldn't treat mild cases, Tim is saying. The hospitals were overwhelmed. Let's see, what are our numbers? 3,700, 3,665 in the United States. That's nothing, too. If this U.S. is not 15, 20,000, I'd be shocked. Shocked. Like they just got the test. Let's see, New York. New York, they just started testing today. They're approaching 1,000. Gottlieb, that guy Gottlieb, you see him on CNBC. He's a pretty reputable guy. He's talking 20,000. So the news is going to get worse. The news is going to get worse. We know that. Yeah, that's the thing, John. It's new. It's contagious. You know what I mean? And I think, John, the reason, if we're talking markets, it's because of just things freezing up. It's got nothing to do with the death rate. It's got nothing to do with anything like that. Like you said, the flu kills more people. It's just, it tells you a lot about our economy too, that you lock up for a month you have people go out of business left and right. So that's why the Fed has got to do what they do, and Mnuchin, what he needs to do. You know, that's what happened in 08 too. Because of the bank mess, credit froze up. So, like I give you an example, Las Vegas Sands, okay, they can't survive. No one's willing to lend them money. It just does. They can't function. So that's why the stock went to $2. If credit locks up, look at this. Hey, you want to see it? Look at this. Okay, like they were on the verge of going out of business until Bernanke did what he did. So that's the problem. You know, so it's good. That's what I'm saying. The Fed already taking action. They learned from 08. Bernanke was stubborn at first because it was something new. That's why this guy Powell's not even waiting for the Fed meeting, right? He's not even waiting the extra day, 2 days. He's firing bazookas already. You have them, you fire them. That was the lesson from 2008. Don't save it, any of it. Put it all out there now. Let it start working, because the longer you wait, the worse it gets. So it's good they're taking action already. That's a good sign. All right, guys, get some rest. It's going to be, listen, action-packed week. But now, you know what I mean? We got a little more to look forward to now, all right, with some of these names that have been lit up. All right. I think now we're keeping an eye on sweeper activity, especially for intraday momentum. And then Friday, the update off those commercial Sharpies. That's when they get into the green. I'm going to feel good about things. So, all right. But I'll keep you guys posted on anything new. Enjoy the night. I'll see you mañana.